Saturday, March 24th, 2018, Maneco 64, home of alternative economics and contrarian views. I'm going to look at Deutsche Domino, actually it's Deutsche Bank, today. And before I go into Deutsche Bank and how it could be very significant for the entire financial system of the world, I'll look at the markets quickly, briefly, what they did last week. It wasn't a good week for the stock markets. The Dow finished down 5.6%. S&P finished down 5.9%. The NASDAQ composite finished down 6.5%. It was a good week for gold. We finished up 2.5% at just around 1347. The spot gold had a good day on Friday. Before I go into Deutsche Bank, let's have a quick look at the chart of the Dow. I've been focusing on this rising wedge formation in the Dow the last weeks or month, since we made a low in the beginning of February at 23,360. I thought this rising pennant or flag or wedge, whatever you want to call it, would last a little longer. I thought we might go back up a little bit after we touched the bottom of that pennant, but no, we've broken definitively, and it doesn't look good at all, that chart. We closed at 23,533. We did not make a new low yesterday compared to the low from the 9th of February, but you never know. I think we could very easily test that low next week. All hell could break loose. Who knows? That's not going to help Deutsche Bank. So what about Deutsche Bank? Well, Deutsche Bank is, of course, the biggest German bank. Also, in terms of assets, it's the third biggest bank in Europe. It's got $1.8 trillion of assets. Shareholder equity, though, is only $75 billion or 60 billion euros. So it's almost like you had a house that was worth, all your equity, if you take your assets and liabilities, was worth $60,000, but you had over almost $2 million worth of investments. And how do you do that? Well, you borrow money to do that. And that's the situation Deutsche Bank is in. It's highly leveraged. Its market cap, by the way, is around 23 billion euros. So $28 billion compared to cryptocurrencies. It's worth just a bit more than Ripple. So when we listen to central bankers, regulators from the BIS talking about that cryptocurrencies could be a threat to financial stability, they have to look at themselves in the mirror and look at the institutions they're supposed to be regulating. Deutsche Bank is a significantly important financial institution, which basically is a too big to fail institution. It's on the list of the BIS. So was HSBC. That's why they didn't criminally prosecute HSBC when they were found out to be laundering money for Mexican drug lords, and that they had contravened U.S. law against terrorist states. They dealt with terrorist states. So that's why they didn't allow the Department of Justice to bring criminal prosecution against HSBC, because it's too important. And Deutsche Bank is in the same situation. So when we have fat bastard from Basel, Mr. Karsten, who is the managing director of the BIS, saying that we need to keep an eye on cryptocurrencies. It could be a threat to financial stability. I would say to him, look at yourself in the mirror and keep a close eye on Deutsche Bank, and also to the German government and the Bundesbank. They gave a hard time to the Southern European countries and the sovereign debt crisis in 2012 in Europe, about how they were profligate and they had to, do something about, how they running their countries. But I'm sorry, Deutsche Bank, German government, Deutsche Bundesbank and the German government, what are you doing? Are you asleep at the switch? You've got like a mine in terms of the financial markets there, right in your, in your territory, Deutsche Bank. So before I go further with Deutsche Bank, I want to go back like 24 years. And you might ask, why 24 years? Well, because 24 years ago, in 1994, and I remember that was a really busy year for me in the markets, because I dealt in bonds, and interest rates really spiked higher in 1994. The bond market collapsed. Not collapsed, but crashed quite badly, government bonds. And Mr. Greenspan, Mr. Magoo had to come to the rescue, help the bank, lower interest rates to make sure, things didn't get worse. And there were consequences. Orange County in California went bankrupt. I think it was the biggest bankruptcy of a county until then in U.S. history. And the bank one of the banks that was involved in dealing with Orange County was a bank called Bankers Trust. And I read here from a New York Times article. This is from 1996. It says, Bankers Trust settles suit with Procter & Gamble. It says, paying a steep price to end a bitter battle, the Bankers Trust New York Corporation agreed yesterday to forgive most of the nearly $200 million the bank contended it was owed by Procter & Gamble over two complex transactions in 1993. Well, what are these complex transactions? Well, they're over-the-counter derivatives, those instruments that caused the '08 crisis, and they're still around. And it goes on to say, Bankers Trust said the agreement, which settles a lawsuit brought by P&G, resolved the last major dispute over losses incurred by its clients in 1994 from derivatives, which are based on various financial markets like stocks, bonds, or currencies. So yeah, 1994 is a huge year because the markets did something that the bankers didn't expect it to do, and that's why Greenspan had to come into the rescue and cut rates. And it goes on to say, when interest rates rose sharply in 1994, all sorts of investors, not just Bankers Trust clients, ranging from some of Piper Jaffray's mutual funds to Orange County, racked up huge losses on derivatives that were sensitive to interest rates. So there you go. Bankers Trust, they were up here with all the derivatives. And what's that got to do with Deutsche Bank? Well, Deutsche Bank took over, bought Bankers Trust in 1998. And again, you go back and you look, why in 1998? Deutsche Bank was just a staid German commercial bank, big commercial bank, and now they're buying, New York investment bank loaded up with derivatives. Well, they did that because they knew that a year later, the Glass-Steagall Act would be rescinded by the Gramm-Leach Bliley Act. It was repealed, under the Clinton administration. So they knew that, so they wanted to get into the action, and they wanted to be involved in the commercial investment banking in the US, the biggest market. So another article here in New York Times, 1998, November. Careful courtship brought Bankers Trust to Deutsche merger. So And it goes on to say here, which I found really interesting, when the merger is complete, the new bank will have more than 800 billion in assets. Well, now they have 1.8 trillion. But some analysts doubt whether Deutsche, traditionally a state commercial bank, will be nimble enough to compete effectively in the investment banking market. The main business it is seeking to bolster by acquiring bankers' trust. And others question the price. And I quote here, it's from a guy called Judah Kraushaar, analyst at Merrill Lynch and Company. It says, a lot of people thought it would be hard to get out of the 70s per share for bankers' trust. And you begin to wonder whether the financial expectations can support a higher price. Well, I think Deutsche Bank ended up paying $84.25. That's what they say here. So, actually, no. Deutsche, excuse myself. It says, Deutsche said the deal in which bankers' trust shareholders will receive $93 a share. So, the street was saying that $70 was tops, and Deutsche Bank paid $93. They were greedy. They wanted to get in the action, and they overpaid for bankers' trust. And I'll show you now a chart of Deutsche Bank going back, quite a few years. And you can see here that, back in, it topped at 140 euros, but, just after that takeover, and we've never seen that price ever again. We're even below the lows of the 2008-2009 crisis right now at 11 euros and 30 cents. So it doesn't look very good longer term. And I'll show you now a chart of the short-term Deutsche Bank. That doesn't look very good either. So we're approaching the lows we made, in 2016. I think the low was just below 9 there. So not looking very good, Deutsche Bank. And it's probably still loaded with derivatives from bankers' trust. It's become a huge, conglomerate investment commercial bank, one of the SIFIs. And the other important factor I wanted to talk about Deutsche Bank, it's one of the primary dealers for the New York Federal Reserve. And what is a primary dealer? As you can see here, it says, primary dealers are trading counterparties of the New York Fed in its implementation of monetary policy. They are also expected to make markets for the New York Fed on behalf of its official account holders as needed, and bid on a pro rata basis in all Treasury auctions at reasonably competitive prices. Well, who are the New York Fed official account holders? Well, it's the U.S. Treasury, probably some other foreign central banks. But you can see here the list of primary dealers. And I highlighted there, Deutsche Bank Securities. So they're part of the club. And they're part of, the ECB as well. Will they allow Deutsche Bank to fail, to collapse? If they did, then it would be several times worse than Lehman Brothers. And Lehman Brothers was an investment bank, so it didn't have customers' deposits like Deutsche Bank. Deutsche Bank is this huge, too big to fail, over-leveraged international bank. It would be a lot more troubling if Deutsche Bank went bust. Am I saying I don't want Deutsche Bank to go bust? No, I'd like to see it go bust. It doesn't deserve to exist. It will eventually go bust. It will be interesting and very important, in my opinion, to keep an eye on what Deutsche Bank does, on what the ECB and the Fed talk about. I'm sure there's going to be a lot of other distractions in the background, political, geopolitical, but that's what they want you to do, to keep an eye on the distraction. But in my opinion, Deutsche Bank is the most important thing to keep an eye on for the existential threat that it poses to the whole global financial system. And the other point I like to make about Deutsche Bank, and this one is very interesting, considering who's the president of the United States now, and I'll bring this article from Business Insider from December 2017. It says, Trump's long and winding history with Deutsche Bank could now be at the center of Robert Mueller's investigation. And I'm not bringing this up because of the investigation. I'm just bringing it up because of the fact that, the President of the United States happens to have a very close relationship with this bank that's teetering on the brink of collapse and could bring the whole world financial system down. His financial disclosures showed he held roughly $360 million in debt to the bank and around $125 million in 2 mortgages for one of the president's major Florida golf courses, Trump National Doral, the Washington Post reported. We'll see if they're going to use their bail-in, but it would be a huge bail-in. You wouldn't want to have money with Deutsche Bank, nor any other bank. That's why when people ask me, do you really think it's okay to have gold now? The pound is recovering now against the dollar. Is it going to go down against gold? And I say maybe in the short term, but longer term, fiat money always debases itself. Gold holds its purchasing power throughout the ages. But not only that, do you really want to have a lot of the wealth that you've been accumulating during your lifetime? Do you want to lend it to these banking institutions that are teetering on the brink of collapse and have that money Cyprused off you? You know what happened in Cyprus a few years ago? I don't think so. That's Deutsche Bank. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.